Mr. Singh, back to you. Now, with all the good work that you're doing, how do you plan for these projects? I saw, yes, there are few partners, but first of all, what kind of resources do you have internally to like what is the planning process? How do you plan? How do you put these to execution, and how do you then monitor? Because at this scale, how do you monitor that the funds are actually going in the right direction? Of course, there are certain reportings, but broadly, what is your process?
See, Sumit, I think you might have noted in my presentation, I said that we have an internal committee, right? So that internal committee, we meet every month. And then we have a dedicated manager who has the responsibility of managing the entire framework, CSR framework. So she is 100% on CSR, and she will get in touch with all the partners on regular basis, weekly basis, daily basis. She'll keep on going on the projects where we are, whether it is a one-off project or running project. She will involve the volunteers, and the volunteers would be more than happy to go along with her. So this is how we keep the partners warm and engaged throughout the process. So coming back to the disbursement part, as I said that once we have a proposal from our partner, the internal committee review that proposal thoroughly and decide that what is the best contribution to be decided for this initiative. And basis that we give a confirmation to the partner that this is what we are going to contribute, and this is going to be the payment release schedule. So we decide everything in advance, so that the partner or the initiative which is going on at any specific site, they can also plan their things in a better way. If they want to get intervention from some other companies, they are more than happy. So we don't believe in exclusivity or something like that. We are more than happy that if some big company like ENY Foundation, as I mentioned in one of my initiatives, if they are working on something, and if we get in touch with ENY or somebody, and they just tell us that, okay, there's a scope if you want to pitch in, so we don't mind. Same way, if we are doing any project, and if some other small company want to pitch in, more than happy.
Understand. Nice. So now, Chandan, as I promised that I'll ask you the most technical questions, and there's something which is very difficult for me as well, is the Section 198. So the CSR expenditure, how do you calculate the CSR expenditure? It's easy to say 2% of the average annual net profits of the last 3 years. That everybody understands. It's the opening line of Section 135. But how are those profits calculated? What are the, at a high level? I know it's a 1 hour discussion in itself, but still, if you could very quickly share your experience of how is that profit calculated, and the 2% of which is required to be spent?
So that's a great question, Sumit. There are a lot of deliberations with respect to calculation of net profits. And in fact, earlier, just to give you a brief background, earlier it was only with respect to when we had to calculate the average net profits and the actual spend, then only provisions of Section 198 were applicable. While for the eligibility side, it was as if your normal profit. However, they've come up with amendment through Companies Amendment Act 2017, which came in 2018. Now, for eligibility point of view, also your profits as per 198 shall be the base. So therefore, 198 is very much applicable. The basic criteria for Section 198 is to find out your operational profits. So therefore, there have been certain adjustments which have been given in Section 198 to add back certain things and to deduct certain things which have already been there. So I'll share one Excel which we actually use for our clients, which can be very helpful for companies to calculate their profits under 198. Allow me to share my screen, please.
Yeah. Very, very briefly, Chandan, if you could just share quickly.
Yeah, I hope this is visible.
Yes.
Yeah. So in 198, we take profit after tax as the base, and there have been certain items which should form part of profit, and which means if they've not been included in the profits, then they have to be added in the profits, and certain items which, if added, had to be deducted. For example, bounties and subsidies. So these are the things basically which are given in 198. So any bounties or subsidies received from government have to be made part of profit. So that cannot be excluded if these are not added. Then certain items which should not form part of your profit are like profit by way of premium on shares or debentures if you have received, profit on sale of forfeited shares, profits of any capital nature from the sale of undertaking, sale of immovable property, then any change in the carrying amount of any asset or liability recognized in equity reserves, like revaluation reserve, for example, which has added up your profits, and then you have to deduct that from your profits because that's not an actual profit. Any amount representing unrealized gains, notional gains, or revaluation of assets. So 3E and 3F are more or less on the same front. So these, if have been included in your profit, you have to deduct because these are not your regular operational profits. Now there are certain expenditures which you can make from your while calculating your profit, and certain expenditure which you have made, you have to add those back. So usual working charges, director's remuneration, bonus commission paid to the member of any company, staff, engineer, technician, tax notified by central government as being in the nature of a tax on excess or abnormal profits. So if there are any abnormal profits and any tax has been paid on that, so you can claim that as business expenditure also. Tax on business profits imposed for special reasons, interest on debentures issued by the company, interest on mortgages, interest on unsecured loans. See, majority of these items are already deducted while calculating the profits. However, the idea is that if those have not been deducted, so you can deduct that while calculating your profits. Expenses on repairs, outgoing, inclusive depreciation to the extent specified. Now 198(4)(L) is very important. It says excess of expenditure over income, which had arisen in computing the net profits in accordance with this section in any year insofar as such excess has not been deducted in any subsequent year, which means any accumulated losses which you have, you can deduct it here. So all previous accumulated losses can be claimed here under section 198 while calculating your profits. Any compensation damages to be paid in virtue of any legal liability, any sum paid by way of insurance against risk, so payment against insurance, debts considered bad and written off. So these are all business expenditure more or less, so these can be deducted. Now what cannot be deducted is your income tax and super tax. So income tax, one very important point here is generally what we do is we take our profit after tax from the balance, from the P&L of the company, and then whatever tax amount is mentioned there, we just add that back. However, it says income tax and super tax payable by the company under Income Tax Act. In case the income tax filed in your income tax return is different than the income tax mentioned in your P&L, then you have to consider income tax filed under Income Tax Act as per your ITR. Any compensation damages or payments made voluntarily, any voluntary payments cannot be claimed as expenditure. Loss of capital nature, including loss on sale of undertaking, and any change in carrying amount of any assets or liabilities recognized in equity reserves. So this is revaluation reserve again. So in case you have excess, then you have to deduct that, which I mentioned above. And in case you have shown losses out of revaluation, then you have to add those losses back. Now, this is how you calculate your profits for 3 years. Then you aggregate those profits and then calculate average profits by dividing the aggregate by 3 and 2% of the same. This is how we calculate. So it is always advisable to have it in Excel format or any similar format so that it is always easier. For example, now I have to mention for 22-23 next year I have to calculate. I simply have to hide this and add one column and it will automatically calculate. So I hope this is helpful by understanding this concept.
This is really helpful, Chandan. Thank you. It was quite technical, but I'm sure people would have been able to get the gist of it. And of course, the God lies in the details. So if you're calculating, calculate it thoroughly, subsection by subsection, or else you can seek professional help from Chandan if required from eMinds Legal. Okay. Coming to Preeti. Preeti, now we're running. It's already 1 o'clock, and it's been a very engaging conversation. Looks like we just started, and it's one. We have a lot of questions coming in, which we will start in a moment. But before we do that, just few sort of pointed things from my side, and then we'll open the floor for questions. Now, Mr. Singh said that there are a lot of people who volunteer, the employees who volunteer. Now, what is your guess or your opinion? Why should I say guess? Can the expenditure incurred on those employees who volunteer, their salaries, their hourly cost, or all this their costs spent behind them, can those be claimed as a CSR expenditure?
No, because so if they have dedicated staff for doing the CSR activity, that can still be made a part of 5%. The administrative expenses, overheads. However, there are companies, just to add to what your question, there are organizations which, mandate their employees to spend 1 day doing some social service or the CSR project. And in those cases, the cost of that 1 day per employee, that cannot be treated as a CSR expense.
Right. So what you say is specific dedicated resource, if you have who's in charge of CSR, that cost can be claimed as an administrative expense subject to maximum of 5% of the overall CSR thing. However, all these indirect costs, etc., cannot be.
Yes.
Welcome to Complinity Technologies. Complinity is India's leading governance, risk and compliance software helping companies to manage their compliance, contracts, litigation, legal updates, inter-financial controls and more. Complinity is a one-stop shop for all GRC needs. With our proprietary 12 GRC modules and real-time legal updates on 2,000 plus laws and 24,000 plus compliances, all in an integrated platform that is easy to use with automated alerts and risk management capabilities, is why compliance managers, general counsels and chief financial officers choose Complinity every time. Join the most innovative and prestigious brands that use Complinity. Automating your compliance management. Request a demo at complinity.com.